4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. We'll be reviewing a simple process, a weekly templates, just identifying where traders have the opportunity for scalable rinse and repeat playbook setups. A simple process that as the week unfolds, we have Friday's closing price for any instrument is our reference point when the new week begins. Monday, day one in the front side of the new week is our opening range. That establishes the new high-low boundaries in the new week on any instrument. Now, the purpose of just following a simple template is so that we can pinpoint instruments that are potentially setting up throughout the week for one great scalable opportunity, or two if we're lucky. Now, in some instances, the opportunities may come in other sessions: Asia, London, New York. We have 3 sessions, and depending on the instruments that are in your basket, they may come in sessions that are not your main trading time. But throughout the week, that may unfold towards the end of the week. It may unfold at the front side of the week. If you're trading one instrument specifically, those opportunities may build into the back side of the week, or they may be one opportunity in the front side of the week. But trying to trade a market every single day is where it gets difficult for traders. They can get sucked into poor quality markets. They can make poor trading decisions based on impulse as opposed to having a rinse and repeat concrete trading plan where you're hunting opportunities where you have a 90-10 edge. Now, it depends on what a trader's objective is. If you're looking for position or swing trading on higher time frames, this can allow you to identify the opportunities when to position yourself in the market in line with higher time frame opportunities. Whether you're trading on that higher time frame, buy and hold or sell and hold, or you're actually looking for the scalable opportunity for a parabolic trade setup being one and done in the market, out of the market, at the close of the day, or in that session to lock in the money and walk away. So just repeating, we have our levels, our high of month, week, day, low of month, week, day as significant levels when a new week begins. Monday can break out. It can break out on a gap. It can break out pre-session, or it can open and establish new highs and lows, test boundaries from the previous week, whether those extremes are on Friday are not the issue. It's if your instrument, if you have your levels established. So for example, we can look at any instrument. We'll take a look at the US dollar. My objective is not to try and predict a market. I'm letting the market set up. Now we have a market that closed in breakout on Thursday. The US dollar, this is a 30-minute chart. If we just reviewed quickly the templates, in the playbook, we're always talking about hunting 90-10 setups. So this is where it differentiates from traders. They're going there, they're trying to figure out where a market's going and take trades. Now I want to just emphasize the importance of sitting on your hands and targeting instruments that are going to offer a 90-10 scalable setup in the session that you're trading. Building your basket based on that session. So for example, I talk about looking at instruments that are going to trade ideally in that US window. US indexes. I trade the New York session, the US dollar index, natural gas, the metals. I'm looking for 1 or 2 opportunities on the metals, either in Asia or the New York window, whichever one gives me the zero stress, zero emotion, zero thinking, and zero type of management opportunity where I can be in the market where it's about to explode and then out of the market. All setups will culminate in either a pump and dump template or a dump and pump template. And then emphasizing the importance of not doing anything else in between, which is where most traders will do damage. They engage in self-sabotaging, random, impulsive, degenerate type of behavior that causes destruction to their trading account, as opposed to sitting and hunting the rinse and repeat 90-10 setups. The compulsion to trade is what will cause a trader to come undone. The compulsion to feel like they need to make money every single day like a 9-to-5 job is where they will come undone. As opposed to hunting and positioning in scalable opportunities where you can significantly compound your account, be out of the market, walk away, and come back the next day to hunt the same or a similar 90-10 opportunity. Now we're just reviewing the importance of the opening, range, and initial balance. Monday, Tuesday, in a high percentage of cases, we'll have established the extremes in most weeks. And depending on the type of template that unfolds, will either help you identify the scalable opportunity or also allow you to see a market that offers you zero edge, avoiding high impact major red news, or waiting until after that news is released and going back to business. The basic model for trade entries is designed to remove analysis paralysis and keep things simple. A simple alignment with the trade setup, and then entry, stop loss, and a take profit level. We're targeting 3-day opportunities that can build into a 3-session setup, keeping things simple. Now, most importantly, the signal days are what brings an instrument up on our watch list for the next day. Markets that break out will do one of two things: either succeed in their breakout or they will reverse and fail. Now, the third option is that they will just stay in a range-bound trading range and do nothing. They can break out or they can stay in a range, but it brings it up onto our list. And then how does price set up? Behavior of price on the day is the most important thing. Does it culminate in a pump and dump or dump and pump 90-10 parabolic trade setup in the session that you're trading? First red day signals, first green day signals, and of course, the inside day. One of the most important signal days that traders can hunt for. Now, just coming back to thinking simple, keeping things as simple as possible. Because if you make it complex, then it's hard to reproduce your results. If it's simple, you can target the opportunity on any instrument. And as I repeat, I'm looking for 2 to 3 scalable opportunities in the week. Now, if the train has left the station in an earlier session, then I'm still just keeping this on my watch list to see as the week unfolds how those opportunities may present. Now, just repeating, there's 2 templates that I'm hunting: dump, coil, and pump. Whether that's on the back side of the week, whether it's on the front side of the week, whether it's in New York, whether it's in Asia for me. I'm looking for this opportunity in the long direction. And in the short direction, pump, coil, and dump. It doesn't matter what instrument I can find this on. If I can find this 2 to 3 times a week in my New York or Asian window, this is the setup that I'm hunting. So the simple understanding of how a template will unfold right immediately allows traders to remove an instrument on the day or potentially target an instrument on the day. Now, I've talked about day one runners, markets that break out on day one, Monday's opening range, or continue to expand the range on a Monday. Typically, we can now look for that week to unfold if it closes in breakout. Markets that close in breakout can offer us significant signal days. I've talked about Tuesday, day 2, typically expands the range. If we get a large day 1 runner, well, Monday can be our range for the week, and we can see inside days present on a Tuesday as the range contracts. But we have our opening range now in a new week. Wednesday, the midpoint range in the basic template is where we can hunt signal days, first red day, first green day, and for traders in the masterclass, the ACB template setup. And Thursday, day 2 on the backside, we can look for expansions or reversals depending on how that template sets up. So if you're trading one instrument, you're going to have variations of weekly templates, but it can help you target high probability opportunities on those days. And then, of course, Friday is our closing range. And as I've talked about, Friday can present in a couple different ways. We can see profit taking on a Friday. We can see traders exiting positions and going flat into the weekend, just leaving a dull, sideways, narrow range market. We can also see traders holding and building positions in a potentially strongly trending market. So Friday's closing range plays an important role. But number one, Friday's closing price is where everything starts from. So on the US dollar index, Thursday closed in breakout. If we just back this up to the previous week, we have our high of week level established on Thursday. I just want to repeat, the idea is not to try and get into a market and guess and get the direction right and hold on to it. I'm looking for the timing window of where I can scale into a parabolic trade setup and be in the market with size, lock in that money and get out and be done. Not holding on to something and just taking a position. That's my approach. Now, going back to the previous week, we have a high of week level established on Thursday. Friday's closing range breaks out and comes back inside. Monday's opening range is an inside day. Tuesday, day 2, expands the range and closes in breakout. So repeating, in between Thursday and Tuesday's close, I've done nothing. Now, some traders in Asia may have taken the inside bar opportunity for the false break reversal back to the low of the current week. Friday, Monday established the new boundary. Monday's the low of the current week. Tuesday closed in breakout. That brings that instrument up onto our watch list. But Wednesday trades as an inside day. Again, another signal day that brings it up on our watch list, and it's also a first green day. Remember what I just said about Wednesday. Wednesday is our midpoint range of the week and also our signal day. Wednesday's first green day. Thursday now, we have this instrument on our watch list. I have the US dollar index because my rationale is that rather than following 20 currency pairs, I can look for opportunities on the US dollar index, which may have a higher probability / possibility of offering me a scalable parabolic trade setup in the New York window at some point throughout the week. Now, Thursday is the day we just identified on our weekly template as a range reversal or range expansion possible trade setup opportunity. So Monday, day 1 opening range. Tuesday, day 2 typically expands the range. Wednesday was our midpoint range of the week. It was also an inside day and a first green day, which is a buy low, low of day, low of session buying opportunity if indeed it presents. Page 64 in the playbook. Keeping things simple, rinse and repeat. Any instrument, I don't care what instrument it is. If it offers me the signal, then it comes up on the watch list. How does it set up on the day into my New York session? This could be the same for the Asian window with an Asian crosspair or an index or a metal, and the same thing for the London session. Same process applies. Any instrument into any session. How does price set up on the day? So we have a 15-minute chart. We come to our New York session timing window, and on the inside day, we already have breakout traders triggered into the market. Now, I want to explain something. There's two types of main opportunities on an inside day: false break reversals or range expansions. Now, in some cases, beginning in any of months, the inside day can be the exhaustion bar for markets after 3 higher closes or 3 lower closes when a market is about to reverse. Now, we have breakout traders in the market. This is not a false break. We have traders now who are long in the market, and the market continues to trade higher highs before we get to our New York window. We already have breakout traders in the market. Now, just using a simple common sense understanding is that longs that are in the market are still in the money. They're not in any stress. The market hasn't broken down right away and gone against them. And traders from Asia, if they're long on the new day, are still also in the money if they also have placed their stop at the low of the current day. Now, inside bar traders on higher time frames will most likely have their stops below the low of day level, which if it was a false break reversal, they would be targeting the other side of that range. Now remember, the two types of templates that I said I was hunting: pump, coil, and dump, or dump, coil, and pump. Higher highs breaking out from the inside bar after our first green day signal. Now this is a 15-minute chart. As we head into our US session, how is price setting up on the day? Let's just go back and review what we started with. Friday's closing price is where the auction process started from. Everything starts from Friday's closing price. So we had a small gap on the open on Monday. Friday's closing price is our reference point where everything begins from. The market broke out of the inside day on Monday, an example of the false break reversal. So traders that were long on the breakout have been triggered, and the market immediately reverses. Pin hammer. Let's blow this up because we talk about a simple entry exit criteria. Traders in the Asian window had an opportunity on day 2 with a signal day for a potential false break reversal trade targeting the low of Friday, the low of the inside day. The inside day, page 69 in the playbook, false break or trend trade opportunities. Now the simple trading model is entry, stop loss, and a take profit level. This is a set and forget situation. The whole point of this is to remove analysis paralysis, the idea of thinking and counting little pushes and gaps and sweeps and hunts and everything else. Pin hammer, entry, risk management, stop loss, and a take profit level. If it's not simple and repeatable and scalable, then your results will be inconsistent and the trader will constantly mission mash, win some, lose some, 50-50, retail headspace type of trading. Entry, stop loss, and a take profit level. If a trader chose to hold this till close or take some profits off and leave a trailer, that's entirely up to their discretion. But an example of the false break reversal trade on the inside day. Now let's fast forward this to Thursday, and we have Friday's closing price. We've already broken out and traded on top of Friday's closing price. Now we're looking at a market that came up on Wednesday as a signal day because it was a first green day and an inside day. We have inside bar traders already in the market. We're on top of Friday's closing price, where the auction process begins from on Thursday, day 2 on the backside, targeting either range reversal or range expansion opportunities. This is a 30-minute chart. So even on our 30-minute chart, we have an engulfment pin hammer for the scalable opportunity, expanding the range, targeting the previous high of week level. Now this is our 30-minute chart, a simple model again, entry, stop loss, take profit. But if we're looking to scale into this opportunity, traders from the masterclass will recognize a scalable parabolic trade setup. Now we just spoke about Friday's closing price. We have breakout traders in the market now. We talked about 2 types of template opportunities. Market has dumped down into Friday's closing price, coiled sideways, come back inside of our basic model for trade entry criteria, keeping it simple to remove analysis paralysis, page 29 in the playbook. Traders will also recognize the beginning of our 10 a.m. window, a new timing window, engulfment on the smaller time frame, the 5-minute, but more importantly, we have our 10 a.m. club. Now, traders from the masterclass will also understand that all time frames are driving this move. The market has done a dump and pump from the previous Thursday. Dump, coiling sideways over the higher time frame, reversing and beginning the pump on the backside of the week. We have our entry for scaling in, our stop loss for managing our downside. We have a break-even level, and on a day 2 range expansion, a hold till close opportunity. Traders want to take profits on a range expansion target, a 100% expansion of our high-low box to lock in some of the profits. That's an option, or they can hold it till close. This is a day 2 backside range expansion, just following our simple template. Instrument is irrelevant. Now, if traders found this on a different currency pair or on a metal or on an index or anything else, the same process applies. But when I say what setup are you hunting, this is a perfect example of having done nothing until the backside of the week for a scalable rinse and repeat opportunity, whether you're position trading, swing trading, or looking for the scalable day trade opportunity on the smaller time frame, which fast forwards us to this current week. Sticking to a simple process, we had a market that closed in breakout on Thursday and then broke the high of week level before reversing and closing back inside of the range. Now, if we go back and look at the previous weekly breakout, Friday closed on top of the breakout from the previous high of week level. As I mentioned, Friday does typically 2 to 3 things. It is profit taking, or it will expand the range and traders can still hold existing positions, or they will be looking to build positions into a new week if there's a potential continuation or trend trade, or they will be flat headed into the weekend. Now, traders, we spoke earlier in the video this week about the parabolic coil for London session traders. Monday, day one, the opening range, everything's based off of Friday's closing price. The auction process begins Monday morning or Sunday night North America time based on Friday's closing price. Market closed in breakout on Monday. That brings that pair up onto traders' watch list. However, this market auctioned back inside and closed as an inside day. So this is an example of not counter trending a day one runner. Why not counter trending a day one runner? Because day one may close at an extreme and continue to auction in that long direction. That market broke down. Some traders may have tried to short it at the end of the day, recognizing the 3 peak opportunity that they may try to sell the high of the week. My approach is not worried about trying to get the high or the low. I'm just waiting for the scalable parabolic opportunity. The point being is this: I could put as much size in here and hope that it continues to fall, but I would rather take the opportunity when a market's coiled and is preparing for an explosive move. If you're going to take a position trade, the same process would apply. Managing your risk, taking an entry, managing your risk, a take profit level, and walking away. As Brent Penfold would say, either having it hit my profit target or being stopped out. Now, this market continued to auction down and go parabolic on day 3, the midpoint range of the week. 2 types of trade opportunity setups: reversal trade or trend trade opportunities. Well, clearly in the Europe window, traders had the trend trade continuation that took out the low of Monday's range, Monday's opening range, filling the gap and trading back to Friday's closing price. You'll recognize that in that window, we also get a pin hammer. Now, this occurred a little bit later in the gap time. We'll just blow this up for traders to see. But if traders were taking a position, the same process applies again: entry, stop loss, and a hold till close or take profit level. We can be taking profits at the close above the closing price of Tuesday. Thursday is an inside day. So we have our midpoint range of the week and our signal day, a first green day signal. However, Thursday trades as an inside day. So we have a market that has given us a signal day. Wednesday, midpoint range of the week, is our signal day. Thursday, though, however, stays as an inside day. Now remember, we've just talked about the inside day, the 2 types of opportunities that can present: false break reversals or trend trades. We just saw an example the previous week of the trend trade, and I said market broke out. If we go back and review that, the market broke out and stayed in breakout of the inside day on Thursday, day 2 on the backside. That is not a false break. However, on Friday, the market breaks out and pulls back right away. Traders who have gone short on the breakout of the inside day are potentially now trapped. And you've heard me repeat the phrase, where is the money? Because if you're short on an inside bar or long on an inside bar and it's a false break, stop losses are typically on the opposite side of that range. We're on top of Friday's closing price, and there are 2 types of trade setups on Wednesday or Friday, day 3, trend trades, as we just said, the blow-off move on Wednesday, or reversals. Now, we're in a market that has triggered breakout traders on our inside day. We had a first green day signal on Wednesday, our signal day. How does price set up into our timing window on Friday in our New York session? Now we have our inside bar traders triggered. We're looking at a 15-minute chart. We have a larger now potentially 2-day dump, coil, and pump template setting up into our New York window. We had 10 a.m. major red news. After the news is released, we can go back to work with our higher time frame thesis, our first green day thesis, day 1, day 2, day 3, into the Friday, the closing range of the week. We want to be taking profits. We can use a 200% expansion of our low of day closing price level. That's our consolidation box. Locking in the money, walking away. It's Friday. I'm not holding any positions into the weekend. I'm going to be flat. I'm taking the money and walking away. Basic model for trade entry criteria aligns this to, again, removing analysis paralysis in line with our higher time frame template for an easy, zero stress, scalable, parabolic opportunity. So sitting on our hands and waiting, if traders had the opportunity on the range expansion in London coil on Monday, day one, but doing nothing else. This is a zero stress, easy money opportunity. The hard part for most traders, though, is sitting on their hands and allowing the template to set up over the course of the week. And that's where traders get chopped up trying to catch moves, predict things, have other impulsive random trades trying to get paid every day like it's a 9-to-5 job. Whereas reality is that you make money on the setups and the days where it's easy to make money. Zero stress, zero thinking, zero emotion, and for the most part, zero management. Entry, stop loss, and a take profit level. If you have a simple rinse and repeat process and you know what setups you're hunting, sitting on your hands becomes easier. Keeping things simple, repeatable, and scalable on any instrument. Keep it simple, traders. Keep it scalable, keep it repeatable, and don't do any other types of random, impulsive, self-sabotaging behaviors in between. Have a great day, and may the markets go with you.